My name is Marouli, and I'm the head of market developments at Ofcom. We sit in the strategy and research group, and we are responsible for providing the evidence base for all of our policy-making decisions. In addition to that, we're also responsible for doing horizon scanning for the organization to ensure that we are aware of what the markets that we regulate today will look like in 5 to 10 years. Now today, I'd like to take you through some of the initial findings that we have in terms of the impact that the lockdown has had on UK audiences in the market. I'll touch a little bit on some of the market dynamics in the connected TV space. And then finally, I'll just comment very briefly on what we've done in terms of the PSB review, for which we published the consultation in December. So I'll quickly share my screen and we can begin. So in April 2020, the average UK consumer watched 6 hours and 25 minutes of content every single day. Now that is a whopping surge from the previous year of over an hour and a half. And you can see that the lockdown measures that were imposed in March 2020 was the tide that lifted all of the boats. So main beneficiary was SVOD, which more than doubled the time spent from the previous year. But you can see even segments like live TV, which has been declining very consistently over the last few years, grew quite significantly, as well as all other forms of video. What's interesting to note as well on this slide is that the majority of the content that is consumed by UK audiences continues to be broadcaster content. So that live TV, recorded playback, as well as BVOD. Now, what we don't see on the slide is that actually, even though it is a large majority, it's fallen quite significantly in terms of shares. So when I was last presenting that slide, this slide a couple of years ago, that figure was 71%. So there might be a case to be made about maybe an acceleration in some of the structural changes that we have seen in the TV market. Finally, the last thing just to point out on this slide is just the status of consumption of BVOD content. So we see that it grew just by 1 minute year on year in April 2020. And that's actually been a consistent story over the last couple of years. So although we have seen growth in online propositions and online video, BVOD doesn't seem to be part of that story. Now, we know that there are many discrepancies across UK audiences by demographic. We know that older demographics tend to watch a lot more live TV. However, what we also hear is that younger people are not watching any TV content, which is simply not true. You can see on the slide when we segment the data by 16 to 34s, they're still watching 6 hours and 21 minutes every single day, which is just 4 minutes shy of the average. So they are very, very much content-driven, content-engaged audiences. Now, the differences, obviously, from the average are in the composition of the content. So whereas we had that 59% figure before, that goes down to 31% when we're looking at 16 to 34s. Some other things to point out about their behavior. One, they've really upped their SVOD consumption by almost an hour year on year. That is now more than 1.5 times the amount they spend watching live TV. YouTube as well is very prominent in their consumption diet. You see that they're spending over an hour every day watching YouTube content. And finally, you can see as well that their other video, as well as gaming, is quite prominent in terms of what millennials are doing in terms of content consumption. Now, in addition to looking at things by demographic, it's always really helpful to also look at things over time. So I'd like to show you a graph that we update quite regularly, just so that we can see some of the longitudinal changes in TV consumption across the UK. Now, this is live TV plus recorded playback, so it doesn't include some of that other video that you've seen in the donuts before. However, I think it's still quite a useful benchmark against which to think about TV viewing. And you can see that over time, so for the last 7 years, that line, that amount of time daily viewing of TV has gone down consistently every year. So we started with 2014 and we've gone down all the way to 2020. And you can see that the first 2 months of the year looked very similar to what we would perhaps expect if we were going to take an average of that decline year on year. However, we saw a steep rise as soon as lockdown measures were announced. And went back 5 years to 2015 in terms of the types of habits that we were exhibiting. Now, as the lockdown wore on and maybe restrictions were lifted, the weather got warmer. This is something that impacts TV viewing quite significantly, as we know. You can see that those curves are U-shapes, and that's very clearly because of temperature as well as sunshine hours. You can read some interesting stuff on Barb's website about that. Those slipped down, and actually even in August and September, supported by the Eat Out to Help Out campaign, viewing fell for the first time underneath the 2019 line that we have over there, that orange line. However, it jumped back up as restrictions were reimposed, and you can see that we've now gone back to 2017 levels of viewing. So we're 3 years behind in terms of changes in TV viewing that we've seen. Now, whether that will go back to that trajectory that I mentioned of continuous decline, we don't know, we will see, but it's something that we're monitoring quite closely. Now, the eagle-eyed among you will have realized that this scale doesn't start at 0. And this is done deliberately so that we can look at some of the changes over time. However, I'm by no means trying to overstate the decline in TV viewing. If I were a business and you told me that I would have engagement over 3 hours a day from UK audiences, I would definitely want to be in that industry. So just to reiterate that TV viewing continues to be a significant proportion of time spent by UK audiences. So just to caveat that this graph for those who are analysts and like to analyze these types of tricks. In terms of what drove the growth in TV viewing, you can see that a lot of it was news. So we have some huge spikes, particularly at the beginning. But what's interesting is that those didn't go down as time went on. So you can see even by early summer, people were watching a lot of news in comparison to what we saw in 2018 and 2019. So this is something that has really buoyed the TV market throughout 2020. And it's probably very highly correlated with the growth of the PSB share of the total TV viewing pie. So you can see that in March, PSBs accounted for just shy of 59% of all TV viewing. This has gone down slightly through June and the summer. However, they still account for a large majority of our viewing. And I think what this reflects is the UK audience's trust that they have in the PSBs to deliver news in a fair and an impartial way as the audiences seek to continue to be informed as restrictions of lockdown change. Now, in terms of thinking about the question about whether this is a structural change or a cyclical change, a blip, or a consumer behavior that's here to stay, what we tried to do is we tried to compare the level of viewing to that of 2019 over the year, week by week. Now, you can see that 2020, unmatched viewing in broadcast TV was quite similar, slightly down perhaps to the previous year, and then we had that big jump in March. Now, as the year went on, broadcast TV sort of started coming down closer to 2019 levels, whereas the unmatched viewing, which includes things like SVOD, DVD viewing, gaming, and any other type of video that's consumed on the TV set, that gap stayed quite stable. So perhaps an early sign that this is a behavior that is here to stay, even as the pandemic eventually ends. Although not a trend by any means, it's just the beginning of a series, but something that we are monitoring closely. It's no surprise, it correlates quite highly as well with SVOD subscriptions. So even before lockdown, we know that over half of all UK households had at least one SVOD subscription, and they were on track to continue on that growth trajectory. However, as lockdown started, and restrictions were imposed, you can see that the gradient of those lines got steeper, it got larger, and so they were adding more and more users to their services. Now, the headlines were stolen by the launch of Disney Plus, which did better than anyone expected, even Disney themselves. Became the third largest SVOD service in the UK. However, it's important, I think, to note and not to forget that actually a lot of the impact was also felt by Netflix and Amazon, the two largest SVOD services in the UK. And they have added quite a lot of subscribers as well, and are really benefiting from that growth throughout 2020 and into 2021. What's also interesting as well, and something that we look at quite a lot, is just the overlap in services across households. And what's interesting is that those who are now Disney Plus subscribers had already been SVOD subscribers, basically all of them, 95% you can see here. And so when we think about things like carrying capacity of SVOD services, SVOD stacking, this is something that there is still a bit of room for. And so some of the additions were very much incremental rather than sort of creation of new demand in the SVOD space. Finally, from a consumer perspective, something that we have been asking UK consumers every year is why they subscribe to SVOD services. You can see about 3-4 years ago, it was because they were trialing the services out, they were taking advantage of a promotion. But as these subscription services have gotten more established, you can see that some of the marketing messages that they've been hammering home have really resonated with audiences. So audiences really value flexibility, which is that left-hand side of the graph over here. They like to control how they watch content, when and where. And finally, the content itself as well. So originals are something that's cited as a big reason for subscribing to Netflix and Amazon, exclusive content, as well as that back catalog. Now, the elephant in the room is that green bar on the right. Of course, Amazon Prime continues to be rated and subscribed to for its delivery services, free one-day delivery service. However, that number has gone down, and actually you can see now that half of people think of Amazon Prime as a video service rather than a delivery service. But going back to that back catalog point, you can see why that's resonating as a message across UK audiences, and it's because we see that the catalog has basically grown. The amount of hours of content available has consistently gone up since 2016 and is now more than 110,000 hours that are available for users and subscribers to watch. So to our delight, what's great is that a significant minority of that is UK produced and UK originated. So UK audiences are able to enjoy content that reflects their society, as well as that international content that is available, particularly on the bigger subscription services. Switching now to what the TV ecosystem looks like. Now, we are just kicking off our 2020 data collection, so unfortunately I can only show you 2019 data, which is now quite old, but I'll try and allude to some of the impacts that we expect to see in 2020 based on what stakeholders have told us. So in terms of first run UK originated content across the PSBs, it's been fairly stable over the last 10 years. It goes up and down a little bit if it's an odd year, if it's an even year. Odd years tend to be a little bit quieter because there aren't any significant sporting events usually, but it sort of fluctuates between 31,000 and 33,000 hours in terms of first run UK originated content. It's new content that's being added and viewed by the UK audiences. Now, spend looks a little bit different. If you look at it as a long time series, it's actually decreased quite a lot by over £1 billion in the last 15 years. However, if you look at it just in the recent years, you'll see that it has been fairly stable. Now, again, this is presented in real terms, so we've removed inflation, which actually has been relatively high in the last few years, as well as we don't include third-party funding, which has been growing quite significantly. So this includes things like co-productions, high-end TV tax reliefs, as well as deficit funding. And that, if you put that on top of this graph, you'll see that actually the picture is a little bit more stable rather than declining. In terms of what we expect to see in 2020, a lot of productions halted at the beginning of the pandemic, and then since the summer and onwards, there have been new safety measures that have also delayed and impeded some productions, made them a little bit more difficult to do. So we expect that this figure will be significantly lower in 2020. However, we'll have to report back in the summer when we get the data back. Finally, in terms of revenue, 2019 was a fairly stable year, although I think if we just look at the top line, you missed some of the nuance here. So we did actually have some significant declines in pay TV and TV advertising revenues, which were offset by their online counterparts, so the SVOD revenue as well as online advertising. And in 2020, it will look even more challenging. We know that Q2 in particular for the TV advertising market was very difficult. However, actually, most of the advertising agencies and the analyst houses have revised their forecast upwards. So we're going to see double-digit decline in 2020 in TV advertising, but a little bit better than we had expected at the beginning of the year. And there are perhaps some silver linings from this as well. I think what we saw in Q2 in particular is that all of a sudden advertisers who are maybe digital first or slightly too small, that were priced out of the TV ad market, were all of a sudden able to buy TV ad inventory, and they did. We had ads from Making Bacon, from Duolingo, from Zoflora. And so although these advertisers probably won't return to linear TV in 2021 and beyond, they will be looking probably for some new TV advertising opportunities, which actually segues me quite nicely to my next section around connected TV gateways. Now, I'll preface this section by saying that we don't collect any data on connected TV from the industry. However, when we did our review of the electronic program guide in the summer, we did commission some work to review the market dynamics in the connected TV space and to get a better understanding of how consumers access and discover TV content. So as you can see on the slide, the ecosystem is complex, and as technology changes and behavior of consumers evolves, it will get increasingly more complex. Now, I'm not trying to recreate a Lumascape chart here. I don't think that's helpful, but I guess what I'm trying to say is that there are multiple touch points here to find the consumer, from the manufacturers, so the Samsungs and the LGs, through to the operating services, operating systems rather, so like your Android TVs and your Fire TVs, all the way through to the content environment, so the app within which you're watching your content, whether it's iPlayer or ITV Hub. Advertising, on the other hand, in the connected TV ecosystem is not new. It's existed for quite a while. However, it has become more prominent, and we're having more and more discussions on this. And I think that there are two reasons for this. Firstly, I think we are reaching a critical mass now of connected TVs. People are not just buying connected TVs, but they actually are connecting them to the internet. So our technology tracker, which we have been running for the last 15 years, which tracks device adoption by UK audiences, shows us that 60% of UK households now have connected their TVs to the internet. And then secondly, what I think is also a catalyst for connected TV advertising is that various market players across the value chains are now interested in having discussions about this, from the manufacturers all the way to the broadcasters. And this is probably driven by the fact that they are looking, the hardware manufacturers are looking for recurring revenue. Hardware sales tend to be one-off, and they happen every few years, whereas advertising can be a kind of nice monthly boost to an otherwise slightly more up and down market. And then for broadcasters as well, as they try to diversify and move away from their more traditional revenue generating means. Finally, I think some of the challenges as well are around some of the relationships within the connected TV advertising ecosystem. So there is some precedent for some agreements between different parties. However, it's a little bit inconsistent across markets. We know that there are some revenue share agreements, and the level of those revenue share agreements has been set by some of the players within the space. But it is something that's still being discussed and debated. And then finally, data is obviously incredibly important in this space, both in terms of targeting, but also analytics and predicting and forecasting audiences. So there are opportunities for new players to come in and offer value to the ecosystem. So just very briefly before I leave you, I just wanted to note some things about what we have been doing in our small screen big debate work. We, in December, as I mentioned, published our consultation for the PSB review, which we have to do every 5 years. And the kind of the most important takeaway from our research for that review is that UK audiences still very much value public service content for the reasons that you see on this slide. What's really important for us is that we have to make sure that we design a framework that's both effective in getting that content to UK audiences, but also future-proof in that it can adapt to some of the big changes that are happening, particularly in technology, but also in consumer behaviors. So with that, I'm going to put some links for you guys to some of the fantastic resources that we have on the Ofcom website, where you can access all of our data and our reports. You can have a further read. However, I'm very happy as well for emails if you have any questions or queries about any of the data that I presented today. But otherwise, I just wanted to say a big thank you for the last 20 minutes, for giving me your time, and I hope that you enjoy the rest of your conference.